Hello and welcome to the Move Your Business Forward podcast. These talks are hosted by Rob Boll, founder of Evoke Management and CEO of International Leaders UK. We'll be talking with experts from both these companies about issues that affect SME companies today.
Okay, welcome to this episode of the Move Your Business Forward podcast. Today I'm joined by two accountants, Kartik and David, joining me. They're both accountants. They're both part of my International Leaders UK network as our industry experts in that accounting seat. And they're joining us today from Kajaine, the practice that they are both part of, and just going to have a bit of a conversation, learning a bit more about their background to what they do and sharing some useful tips for business owners or people running companies as well. So guys, really good to have you join me today. So thank you for spending a bit of time with us on this podcast.
No problem at all.
Looking forward to talking to you both. So Kartik, going to start with you because you both had interesting backgrounds to get to where you are. So Kartik, it'd be great just to take a step back in time to hear a bit about your background and what led you into the fun and enthusiastic world of accounting.
I know, fantastic. Thank you. So it's a very difficult one for me. I actually grew up in a family of accountants. So my father, my uncle, I've got lots of accountants in the family. So I grew up in a very modest area in Tottenham, North London. I studied mechanical engineering with business finance at UCL, but it was joint honours with LSE. And it was that business finance element that really drove me into accounting. I'd also had a flavour of A-level accounting. So I think growing up, I've always had that accounting business type fascination in the back of my mind, despite being quite strong at maths and science. After university, I found engineering jobs weren't very easy to come by. The things I wanted to do didn't exist, and I didn't particularly fancy moving across the pond to the States or to Germany. So I landed myself a job at PricewaterhouseCoopers, where I ticked and bash, cash and bank, and amongst other things for 5.5 years. But that's where it really started to settle down as a career that I want to progress for the rest of my life. I realised I really do love accounting, as weird as it does sound. And 5.5 years in audit on various projects in insurance companies, investments, mutual funds, unit trusts, was very, very fascinating and sort of helpful towards the journey of where I've got. One thing I did realise though, after 5 years of being an accountant, I didn't know how to file my own tax return. So I realised that for the long-term future and to have a family-based lifestyle, which is something that was very important to me, I had to leave the larger firm background to work for a smaller firm and sort of, or otherwise start my own practice. So it's something that I realised that what I wanted to do while I was still at PwC. So I took a gap year for 1.5 years, where I spent time in India with my family, helped my father on his property portfolio, and then I joined a small firm, Kajaine in Edgware, as a manager. Which yielded fruitful results. I learned everything I never learned as an accountant at the large four, and it really molded me to where I am. All the missing pieces to the jigsaw puzzle really came from the small firm, and I think having this mixture of large firm and small firm really complemented the entire facets of accounting knowledge that I already possessed, to build an all-round encompassing structure. Which I think I dwell on almost every day, and I'm thankful to everyone that's helped me along the journey. So that's broadly, sort of how I got there, and the opportunity to become a partner came one day, which I grabbed with two hands, and we've just grown ever since.
No, excellent. No, it's a great story, and the flip from engineering into accounting is obviously the natural step to take. So you've followed the logical route there, which is great. David, what about you? What's your kind of story to get into Kajaine?
I'll tell you my story, but before I do, I just wanted to point out that factor that Kartik, all accountants to move up, you will often see that they move through a few firms, but I'd never met an accountant like Kartik, and the reason is because he's probably one of the only accountants who has a background in engineering. So most accountants, we're very structured, and sort of very good at following processes, and very often follow processes that they've just sort of been shown in the past, but not necessarily good at thinking outside the box. And the one thing I noticed the second I met Kartik, when he convinced me to come in for a chat, when I wasn't too keen at the beginning, and then when I came in and I met him, and I could see that he thinks about things completely different. It's very unique, his journey, because there's not many accountants who have that engineering brain, the way that their brain works. So yeah, that's why I follow him.
No, it's great. No, I think that's a really good point to pick up on, David. So yeah, let's hear about your story, David. And,
my story, I suppose, it starts the same in some ways. My dad was an accountant and lectured accounting around the world, and I always swore that I'd never be an accountant. And then I finished uni and I was working for a consulting firm, and I was actually working in their finance department. And the CEO said to me, "You should go into sales." So I sort of thought about it, and I thought, yeah, that sounds quite lucrative, I suppose, was the drive for me at the time. But also, he was saying, "You're a people person, you should go into sales." And I went and found a job in sales, selling. I won't go into the details of what it was, but the point was that I worked in sales for about 1.5 years, and I did enjoy it, but I just didn't feel like it was feeding my brain enough. I loved dealing with people, but I didn't feel that it was, I needed more substance. Rather than selling a product, I wanted to be able to sell a service and be able to help people rather than just chatting to them. And that's when I faced the tough reality that I was built to be an accountant. And I started off at a sort of medium firm in town called Liven, and I was there for about 4 years, and I did all my exams, and I got the basics of my training there. And I suppose I then, like Kartik said, it's quite a good mix. A lot of accountants like to do that, where you go to a larger firm and then a smaller firm, so you see sort of both sides and both sort of skill sets. And then I moved to a boutique firm which had sort of very large clients in the entertainment business, and it was really like a baptism of fire from day one. I was given so many situations that I'd never been given before and was never exposed to, and the pressure was put on me, and I learned a hell of a lot there. And then I started building my own portfolio on the side, and I was looking for a more local firm, and I was lucky enough to come across Kartik. We were introduced, we had a chat on the phone, and I wasn't convinced that we were right for each other, but Kartik said, "You know what, come in for a cup of tea and come and meet me and the other partner package." And that was about 4 or 5 years ago, and ever since that cup of tea on a Sunday morning, we found that we clicked really well. I felt that Kartik had things, and Pankaj had skills, obviously, and experience that I didn't have, but I also had something to offer. And since then, I've developed a lot, and I've learned a lot of skills. And I suppose now I'm at a stage, once you get to a more senior stage in accounting, you're able to have the service and the knowledge to be able to work with people. And those two things together, I find that I'm now able to enjoy.
Cool. No, I think it's a great story. As you say, the natural step from sales and then into accounting is perfect. Well, I'm a qualified accountant as well. I'm SEMA qualified, and I probably do less of the accounting now, but originally I'm SEMA qualified as well. So, and I've been in that big bank, JP Morgan type size company, and then in some smaller boutique firms, all within finance and operations, and then working with SMEs for almost 10 years now as my core focus. But yeah, deep down, numbers, accounting, and dealing with facts and figures is a key driver for me. And I think
Rob, we're always looking for staff,
always looking for staff. Well, look, every business has got this challenge with staff at the moment, and I guess for you guys it's the same. But there's always that attraction, isn't there, to people that are getting qualified in accounting to go to those big firms, because it looks great on a CV, and it does, but you do learn a lot more, I think, in the smaller practices, especially if you're on the pointy end of interesting stuff. And it'd be great to find out a bit more about some of the interesting stuff that you guys are maybe seeing at the moment, and what you think that means for SME businesses at the moment, and looking really to share some tips there. So, and obviously not needing to divulge any particular details about particular clients, but it'd be great to understand the kind of things you're seeing right now for your clients, and what tips you'd be offering out there to the wider world of business owners.
Yeah, absolutely. So so I think where the difference is in working for a smaller practice versus a larger practice is the focus you get is directly with the owner of the business.
Mm.
Whereas when you're working in a larger firm, you tend to work with a finance department or finance team. So there's a distinct difference between the mentality of your client or your perceived clients because of the day-to-day interaction. So we get to see at the forefront of each business the challenges, almost like a daily SWOT analysis of each business, and what's happening day in, day out from a business perspective, from a commercial perspective. Whereas when I was at PwC, we only focused on what's happening on the figures, on the management accounts, or on the stat figures, or specifically to do with the finance of the company. But you don't really get to see an insight as to how the business is actually run. And that changes the entire outlook in the picture and your conversation with your clientele, your output as well, because you get to learn what it is as a problem. So, for example, just this morning, I was discussing an investment portfolio that one of our clients has. They were approached by a wealth advisor who promised them 13% annual returns. They said, well, fantastic. So they threw money at it. The first 2 years it did well, so they threw more money at it. And as you can imagine, the markets over the last 4 or 5 years have been in a fair bit of turmoil. The wealth manager's strategy has been dollar heavy in products which have been fairly risky, which has sort of led to substantial losses. So we've just had a discussion this morning about how to succinctly exit from a portfolio that isn't really doing well, and then sort of rethink that strategy. So whilst it's not exactly accounting or tax, but you get to see what's happening at the forefront of how wealth managers are planning and strategizing, sort of clients' funds, how they're seeking to try and make money, or what sort of things they're offering. Obviously, the 13% guarantee doesn't really exist. Nobody can guarantee, a fixed sum of money, at that rate when the going rates are about 3 or 4%. So, so I think when something's too good to be true, I think it's important for people to know that it might actually be too good to be true, and it might just be a dangling of a carrot, which you can never actually take a bite of. So there's that. Then we're looking at. I had another conversation just this morning. A group of 3 ladies who want to set up a brand new business in, sort of buying hotels in London. They're bankers at the minute, and they're earning very well, but they realize that they can't continue working for the rest of their lives. They want to do something more interesting. The 3 friends have got together, and they're going to. We've just helped them set up a corporate structure for this new business, which is highly tax efficient. And they're going to use that structure, and each subsidiary will have a special purpose vehicle to buy a hotel in each of those SPVs, so that they can sort of effectively manage their portfolio. If they didn't ever want to exit their portfolio, they could simply sell an SPV off to a potential investor. It's almost like a gift wrapped present to another investor, because it's already in a limited company and it doesn't affect the overall group structure. So so we're looking at these things, and you might ask, why hotels and why not buy-to-lets and why not Airbnbs? And I think one of the things that some of our clients are looking at, even though they're in their 30s or their 40s perhaps, is planning for inheritance tax at an early stage, because a hotel would qualify for 100% business property relief at the time of death, whereas a buy-to-let property might not. So there's a wider consideration that is going into the discussions that we're having with clients these days, especially as land and property values have shot right through the roof over the last sort of decade or so. The angles on tax planning have changed dramatically, and the government at large has been trying to keep the bandings or the limits the same. So as inflationary pressures increase sort of income and gains throughout the country, because of the bandings remaining static and not moving in time with inflation, more and more individuals and businesses are falling into the bands of higher rate taxes, which haven't been the case so much in the past. So the need for tax planning 20 years ago to now has changed significantly on the landscape. And I think with the next general election, it's going to be very important, because it will really pave the way the next 4 or 5 years in Britain will go. But I don't, depending on which government comes in, we'll only know for sure. However, I can't see either government at this stage reducing the tax burden on any of the, on either the businesses or individuals. So I think taxation is going to play a very important role in the strategic positioning of the UK, and also the tax planning aspects and incentives that the people already here might want to partake in. And it will lead us to very fruitful discussions with our clients who have an ever increasing portfolio or a drive to sort of do more with their money or more with their cash. I think the outlook's very promising overall from our perspective.
No, well, it's good, and you've obviously shared quite a bit there. And I think one of the things I want to pick up on, Kartik, is someone that's got themselves into position, even a hole with an investment portfolio. We always see businesses that have got themselves into that problem position, and I guess what you're able to offer advice on is, there's not a magic wand to fix it, but what are the logical steps and options they've got to navigate out of that and make sure they're not going further into that hole and they're actually treading forward with a path. And I think that's part of it's almost like a consultative accounting approach, isn't it? You're asking those questions and trying to figure out, okay, how can we get out of this, and linking that into maybe some other longer term stuff as well.
Yeah, absolutely. And I think it's key to if there are any people listening to this who have portfolios and they're not really sure what's happening, speak to your brokers, but don't trust everything that they say, because we've heard all the possible excuses that we can on this particular client, and they promise the world that the delivery isn't really there. The reports might say one thing, but then when we do our accounting, it says something else, and we're always the ones to get shot, saying that the accountants don't really know it.
I think getting that second perspective and almost shopping around for advice and thoughts is super, super important. David, what's your take on this kind of advice and anything else you've been working on?
I was going to point out one thing which I think is quite relevant, which me and Kartik have seen quite a bit of, which is when, let's say, someone has, what's common is that someone will have a trading company or business partners or something, and then they will, as they become more successful, and they will invest in different portfolios or properties or different investment opportunities. I think it's a good idea to plan early and to have an idea of even where you ideally would want to go. It doesn't mean you'll necessarily get there, but what we found, me and Kartik, is that we've had a few clients, let's say around our age, let's say mid-30s to mid-40s, who have come to us after previously having accountants and sort of not been proactive with how they were going about building their portfolio and their investment opportunities. And what happened, I'll give you an example. We had two guys who came to us who had a very, very successful trading company, and it'd been successful for, I'd say, less than a decade, but they built up a huge amount of reserves, and they'd invested in all sorts of different opportunities. They were real, textbook entrepreneurs, throwing money at all different sorts of opportunities, really diversifying. The problem was the way that they'd done it. They'd invested with so many different people, a lot of different partners, and it was just a complete mess from an efficiency, practical, administrative side, but also from a tax planning point of view, is in between, how they were going to structure things between them. And what we'd realized, that they'd never set up holding companies. They'd never done it in a way which was going to allow for, easier access and better tax planning. And what we had to do is do it in a restructure, but it's much harder when you do it, sort of at the end of not the end of the journey, but let's say not at the beginning. And you have to, what we've done is we've done this on a few occasions where we've written to HMRC and we've asked for we've tried to set up a holding company group structure and do a share for share exchange, and we've communicated with HMRC and got prior approval from them, in order that they won't, 5 years later suddenly claim that there's a capital gains implication. But the point is that had these guys, and now when we get clients who are starting at the beginning and we say to them, right, we know you're just building a trading company now, but let's think, if it goes well, and you ideally might want to, the first thing people always say is, oh, I'd love to build up reserves and be able to, put a down payment on an investment property and set up another company. We say, well, let's look at this now. Should we at this point set up a holding company and set up the right structure, or whatever the different, options are? And my point is just that don't wait until you're already in a position where you've got those reserves and you suddenly have to jump at an opportunity. think about it nice and early. Be proactive with whoever your finance advisor or your accountant is. Sit down and say, right, if I do get the reserves, what do you suggest is the best way to structure this? Just so we know now. And then if an opportunity comes up and I've got the money, I don't have to wait months for you to set everything up. It's ready and I can jump at that opportunity.
I think the really key thing there is, and I think this, people don't know the questions they should be asking an accountant, or they don't know the questions they should be asking themselves, or even the questions they should be answering, right, as well. And I think the key thing you're both alluding to here is have the conversation early, because you might not know, right? You might not know ultimately what the end result is going to be. But if you assume you're starting a business or you're running a business that's going to get more and more profitable, more and more successful, there's going to be other things on the back of that. Think about what the permutations are now to set things up, because it's probably easy to have the structure and have some dormancy in that structure now, but have a clear idea of how things pick, because it will make a difference later on. We've obviously covered quite a lot in quite a short space of time, and we're trying to keep this to a 20-minute podcast. So I'm just going to cut straight to top tips, and I think this will wrap up the conversation we've had. If anyone listening to this is, and I also like the fact that you're referring to a lot of younger clients as well, which is great. I think the fact that you've got attracting young successful entrepreneurs who have got things to do is great. But someone that's maybe in that space, entrepreneur within the kind of mid-30s to mid-40s space, what would be your biggest top tip for them if they're going to do anything with their business and planning? Kartik?
Yeah, so I think where you need to start off is your ultimate goal. So, for example, I told you my goal was to have a more family-based sort of scenario. So I worked backwards. So what I practice what I preach. So we work backwards from the main goal.
Yeah.
Once you know what your objectives are, it becomes very clear, very easy to direct your strategy and what you want to do. I think a lot of people are running around trying to make money or successfully making money, but without a clear purpose or a vision as to how to actually realize those visions that they might have, or they may not have even thought about an exit plan or a strategy. So I think that the first sort of thing that you need to map out in your mind is where you are going with all of this. Based on that, speak to your financial advisor, your accountant, and if they don't have one, they can come and speak to us. But in summary, your professionals will work alongside you based on your goals to map out and create a lovely architect diagram of what one needs to do.
Yeah,
that will really set the lines. Once you know where you're going, all the tax planning opportunities will actually come automatically. I think what a lot of people do is they approach it the other way around and say, look, I've done this trade for the last 12 months. Mr. Accountant or Mrs. Accountant, can you now help me save the tax? There's not really much you can do after the event has taken place. Yeah. The referee's blown the whistle. That's it. It's the end. So I think it's really important to plan for the short term, but it's actually, from a tax and accounting perspective, it's actually better to plan for the medium to long term with your end goals in mind, because that really allows you to build something really beautiful. And if it's done nicely, it works so nice as it's just dream. It's just like a dream. It works so well and efficient, and you never look at accounting as a boring subject ever again.
Accounting shouldn't be boring, right? Because it solves.
But we have this perception, Rob, unfortunately.
Yeah. I think the interesting thing you mentioned there, Kartik, from your own experience, is also that work-life balance as well. It's not just about money; it's structuring something that works for you, your family, from a monetary wealth, and also just timing as well, which is important.
Absolutely, yeah.
David, your top tip? I
would say, in conjunction with, or what will allow you to fulfill what Kartik's just pointed out, is whoever you should build a proper and a close relationship with whoever your professional advisors are. So ideally you want someone who's proactive in terms of your, whether it's from a solicitor's point of view or accounting or an IFA. And by building that close relationship and being proactive, like sometimes people will often some let's say accountants are naturally proactive, but some maybe aren't because you're not letting them know that that's what you expect of them. And I always advise people, even when people sometimes come to me and Kartik and say, right, we'd like you to represent us, I always say, look, are you happy where you are? And sometimes they say, well, I am, but I feel like he's not being proactive enough. So I say to them, well, you don't necessarily need to move to us. Why don't you, if you're happy where you are, why don't you suggest to him what you expect and maybe that relationship will develop and open up to what you want it to be. Like if it ain't broke, don't fix it sort of thing. So we're not keen to, drag people away. But what I encourage people to do is to build relationships and be clear on the relationships, what you want from them. And by building closer relationships with your professional advisors, you will in turn they will be clearer on what you expect and what you need and what you want, like Kartik's just described, and therefore be able to point you in the right direction and advise you accordingly. And I think that's really important. It's like everything. It's relationships are just so important, and you will define what the relationship is. Don't wait for your advisors to be proactive. Tell them you want them to be proactive. Tell them what you want from them, and then you've got more chance of getting it. And if it doesn't work out, then you can move on. No problem. I'm sure you'll be able to find the right person. But
I think that's a great point, because I think a lot of people just deem their accountant as part of the regulatory compliance thing that needs to get done. And actually, there's a lot more to it. And
exactly, and it can be if you want it to be.
Yeah, and if you don't ask, you don't get, because at the end of the day, even if your accountant turns around and says, you've actually taken up a bit more of our time because of your questions and us trying to be proactive, we're going to have to put our fee up. Generally, accountants are very bad at doing that anyway. But
also, Rob, I think
for that advice, it's important.
I also think it's actually the more interesting conversation that we actually really like to have deep down as well. We'll be here Saturday crunching numbers and stats all day anyway. So the moment something remotely interesting comes up, it's actually something that we want to discuss.
Do us a favour, make our life interesting.
Yeah, that's it. Yeah, it's a great shout, isn't it? You want to be quizzed, you want to be questions, hassled, because that makes your day interesting. And
we also want to build those relationships as well. It makes it more enjoyable. If you're going to be, let's say, like Kartik always said this to me, where you want to grow with your clients. So if we have clients who are our age and their trajectory is like this, chances are, hopefully, we're going to be with them for the next 20 years, and we want to be able to enjoy that journey, helping our clients, and in turn, enjoying the journey with them. So it's it's good for everyone.
Perfect. Listen, guys, thanks so much for joining me on this podcast, and might do another one at some point. But thanks very much for joining today. I've really enjoyed talking to you, and hopefully some value to the people listening to this.
Thank you, Rob. Much appreciated.
Take care.
Thanks for listening. If you'd like more information about the topics discussed in this podcast, then you can find us on our website at moveyourbusinessforward.com.